To me, it's not more like, do they, can't they? Yeah. So it's like,
Yeah. Okay, Danny's getting an error.
that's interesting. So maybe, you guys, is there a place where you select a period of the year you're paying for?
Yeah.
Not anymore. Can you hear
Hey,
me?
Danny. Yeah, I can hear you.
You can hear me now?
Mhm. Yes, can you hear me?
I can hear you. Hi.
We good?
Hi, everybody.
Yeah.
All good, Marlon. Thank you. I think I just had to turn my webcam on my computer off. Hi,
Yeah.
Danny.
All right. Yeah, so my name's Lauren Urbanzik. I own a brokerage office in Texas, and so we do mostly ag trading, ag hedging. My husband's a farmer, so we farm. We have a feed yard. We feed cattle. We grow corn, wheat, sorghum silage, all for hay or for silage. And then we've got about 7,500 head of cattle on feed, and trading also and hedging through that. So I've been in this business since I graduated college, 2013. So about 13 years. But 13 years in, and every day realize there's so much more to learn. So yeah, you want to introduce yourself, Dani?
Sure. Hi, everybody. Thanks, Lauren. My name is Dani Sitlow. I've been in the business since '98. I started as an ARB clerk in the SPX, and I actually come from a legacy of trading educators. My father was one of the first trading educators in the Chicagoland area between the three exchanges, and I actually taught his electronic trading course for his program way back when. And then once I was in the options, as I was an options clerk, my team asked me if I wanted to join the team on the floor, and then or fill their hedges upstairs, as the minis had just came on the scene. And I chose upstairs, and I chose a 60-40 split. As a trader, I traded for myself for about 4 years. I actually ended up clearing my dad after and taking 100% of my money. And then I stopped trading a little bit after, a couple years after September 11th, and then took my career off the floor, away from trading, but more on the risk management, account management side of things, and certainly technology, connectivity, and data side of things. So built the E-Trade Lite retail program. Most of my customers were high volume, either institutional or retail traders. And in between there, along the journey, I've come back to trading and done some other things, but really I'm here today to support you in your journey. And like Lauren said, everything, every day is something new to learn about yourself and about the market that you're trading and your process. So that's what I'm here for.
Yeah.
So, thank you.
So to kind of give you an overview, Dani and I together want to focus on trading mindset, running your trading like a business, the mindset and business management of trading. And then, Dani's specialty is more on the mindset stuff. My specialty is more on the ags as far as, and then, the actual execution and the trading. And Dani's executing more on the equities. So we can talk about all that kind of stuff. We're going to get started with just a little bit of this presentation we put together to kind of gauge the audience, talk to you guys, see who's here, where you're coming from, what your backgrounds are, what you want from us before we just start rambling. So on this, it's an interactive presentation. So if you'll use the QR code or scan that, we can kind of get some feedback here. So I'm gonna do this here. So scan this QR code. I don't know. I'll mess with this and see. I'll probably just end up putting it. Okay. I'll see if Claude has any insight. So trading is like, what is trading to us? Yeah, some ideas. Trading is financial freedom. Trading is lucrative. It's also hard, challenging, speculation, a puzzle to put together, path to financial freedom, opportunity. Let's see how we go here. Why am I trading? So, Dani, you can kind of talk on this too, but maybe not necessarily each day, but maybe each day we want to come in and we want to know, like, what is trading to us? It's a business or it's a challenge, but also why am I here? What's my purpose? What are my goals?
Yeah, I find that, and we'll go into it with the Trade Anchors worksheet and website, but certainly, and Lauren, you and I have spoken about it many times, it's that if I'm not reminded why I'm doing what I'm doing, especially when it comes to trading, then I will lean more towards my not great habits versus my clear intentions and making my A trades versus my C trades. So, and we'll go into that as well. But certainly I need to be reminded exactly what is my why, my goals, everything that Lauren just said. A constant reminder. First thing is the reminder as to why are we doing this?
Yeah. Am I doing this to make money or am I doing this to be right? And sometimes the trade turns more from making money to being right. And so I've moved from my business plan and my trading rules. I've moved away from following that rules and doing it as a business decision to doing it out of ego. And, now it's like, I don't even care how much I make on this or lose on this. It's not about the money anymore. It's about being right. And so we have to remind ourselves, are we really trading to be right? Are we trading to make money? Are we trading to, why are we trading?
And coming back, why are we trading? And coming back to the business side of things. So the less emotional component of it.
Yes. Trying to remove the emotion. We don't want to, because that's what makes us human. And that's what makes us successful and better than, just an algorithm or an AI or a computer. So that's where our strengths come in, but also where our weaknesses come in also. Trading is hard. It's hard for everyone. Why am I doing this?
Lauren, can you actually read the answers?
Yeah, to make money. Why am I trading? To make money, to build a revenue stream, for generational wealth. Trading is hard. Is it hard for everyone? Why am I trading? For financial time and freedom, for financial freedom, to develop more consistency, to make money, challenge myself, and enjoy the flexibility it provides, to be right, to make money, freedom, and wealth building.
Yeah.
So obviously we're here to make money. But we have to remind ourselves that too. We get deep into the trade and we forget our goal is to make money, not to be right, not to care about, the right narrative or to, whatever it is. So one says, do you think grain prices are going to go up with what's going on in the Middle East? We can look at that here in a little bit. And then Manny says, don't avoid your emotions, go deeper into them to see what's there and how you can use that as a part of your edge. Yeah, exactly. So the goal is never to remove the emotions, but it's to know how to coexist with them and keep our business focused as a business.
Yeah.
Let's see. I don't know what this is doing. Okay, so wealth building, financial freedom, personal challenge.
Great. Thank you for those who are responding, by the way.
And just to, let's see, to get some more information about our audience, do we have people who have a process, trading process, are looking for a process, or looking to refine their process? Okay, so seems like most everyone in the group. Yeah. Sometimes we have a process and sometimes we divert from that process too. And then I think, probably always we're looking to see if it needs to be refined, see if it can get better, see what it takes to make it better.
And certainly as the market evolves and, news has
things still working. Do we need to adjust our process, or is there a better process out there?
Right. Certainly today's market is not the same as yesterday's or the day before as far as momentum and follow through. I mean, there obviously is follow through as an extension of the rally, but I mean, it's different than it was yesterday. And so, how long did it take? It's taken this long. It's continuing to take this long to make money. And actually, I mean, certainly, I would say that my view and relationship with money back in my 20s, and even when I traded at GHCO, which was Goldenberg Hamer's prop trading group, back in 2009, certainly my relationship with money as I became more of an adult started to change. So even now, my relationship is different. So it's been an ever evolving opportunity for me to review that and why I'm taking the trades that I'm taking. Great question. Thank you.
Okay, so when we fall out of alignment with our rules, I mean, we can come in with the day, we can have our trading rules. Number one, do we have trading rules? Do we have a process? Do we have rules for following that process? And then as emotions take over, as the market moves, headlines move, whatever happens, we eventually, at some point, we fall out of alignment where we can get to where we don't even know what those trading rules are. We'll get into kind of what trading rules are, how they serve us, how we set them. But what do we notice first? And, sometimes you can just start clicking and you're like, I don't even know how many trades I just took. I couldn't tell you. I started my IB. I've worked for several different IBs, but I've owned this IB since for about 3 years now, 2023. And then the CTA, I do have a CTA, it's idle right now. So trying to decide what direction I want to take that. So not active at the moment. Yeah, rage. Not feeling good enough, feeling behind, want to get it back, tunnel vision. What instrument do I use to hedge kettle futures and options? And we can go into some of those charts here in a little bit too. Okay, if we could fix something, just not have to worry about that anymore, what would that look like?
Yeah.
How much hedging do we do with the cattle? A lot. I mean, we're hedged. We're always hedged. We're always adjusting those hedges.
I have to agree with every single one of those responses.
Yeah.
Yeah.
Starting bringing
I
to
mean,
her.
especially coming from old school scalper mindset, I think I'm always working through that forever. I have a great tendency to hold on to my winners. I can definitely, that's not a weakness of mine, but certainly those impulse trades and that scalper mindset. I wrote about it on Substack, so you guys, I'll show you where to find that, but certainly I feel it and I understand.
Okay, that was to kind of gather some feedback from our audience, make sure we're talking about things that are relevant, but I think all of this is relevant to all of us. Do you want to look at some ag charts now and then go to some mindset, or you want to?
Let's look at trade anchors, let them know, start there, and then we'll go back to charts and finish up with charts. But Dani asked me, can you talk about your day and starting out in the markets and how my dad influenced you? Oh, I mean, shoot. I mean, I was his daughter. So for those of you that don't know, I have an older sister who was the first woman broker in the NASDAQ on the floor. And then my brother-in-law was in the bonds, the 30-year bonds. And so he was actually my mentor. My dad was my coach. Lauren just fell out. But I can honestly say that it was my brother-in-law who I sat with every day reviewing my trades. So he definitely influenced me. He told me, he really taught me how to scalp in, scalp out of my positions way back when. And then certainly when I first started, I worked with the Anteros group, and one of the younger Reynoso brothers, O'Keefe at the time, JJ, he would sit with me and explain, how to work with bids and stuff. So basically, I mean, my day hasn't really changed. Those are still my indicators. I've added the OR. I mean, for those of you who may not even know, I had a segment on Anthony Crudelli's show, Trading Futures with Anthony Crudelli, almost 7 years ago. And so once I had learned the OR trade, I just knew it was a part of my process, but I definitely use other indicators to support it. So hopefully. Yeah, Manny, I agree. They're tough. I'm hopefully going to teach support, give you tools to overcome that first, and then
I'm just pausing that screen share, and then so I had to restart. But go trade anchors here. And do you want to share your screen, or do you want me to?
Yeah, I'll share my screen.
Okay.
It's okay. Let's see. Oh, yeah.
Yeah, we both trade every day. Sometimes, I mean, not necessarily every day, but yes, currently, yes.
Yes. Can you see my screen? Yeah.
Yeah.
Well, for some reason, your screen I can't make out the lettering. It's not clear for some reason.
Okay, I can stop sharing. Let me stop sharing and then.
Yeah, so Dani, I trade EVAP, so a performance account through Apex, just so you guys know. And I've gone through quite a few evaluation accounts and performance accounts with other evaluation services. It's just my process. I just would prefer, I've traded my own money, and I think for me personally, the evaluation services prop trading works best. That's new. For others, it may work differently, obviously, but okay. So this is what Lauren and I have built to support you guys. So if you go to tradeanchors.com, it's just a landing page. You need to just list your name, your email, and you'll get your worksheet. Before you get your worksheet, I encourage you to go to the concept guide. Let's see. So if you click the concept guide, it just reviews basically everything you know in a different way to support your trading and to look at how you trade. Your short-term trades, those 30-second trades, those are impulse trades. If the trade doesn't evolve and go your way, and you're just clicking to get in and out every 30 seconds, then you know that's not the trade, it's noise. And then you can grade your process. The A trades are the trades that just go. Your timing is perfect. It could be a win or loss. You may get scratched out if you're looking for, you know, the expansion, but it's not at that expansion time. Your B trades are your valid ideas. There's with a slight execution gap. You're a little bit late or a little bit early, but it still goes your way. And your C's are your constant impulse trades, your rule break or emotional entries. And Manny, that is, you know, for me, I think grading my trades helped me the most rather than looking at them as a win-loss, 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 and then my win-loss percentage rate, because then that just either I'm winning or I'm defeated mentally. And so, you know, taking a look at this with the concept guide, you're just looking at concepts and reading through how this worksheet is going to play out for you. So the trade windows, we all know that where liquidity is, it's in the morning, obviously on the open till about 10:30, 11 Central, and that may even be a little bit too late. And then the 2 p.m. Central time trade till close. And of course, the market on close trades, which have started earlier and earlier. So your entry types, your noise versus structure, your stop conditions. You know, do you stop with 2 or more C trades in a session? I know if my first trade of the day is a C trade, that I shouldn't be trading for that morning or that afternoon. And then you're executing your process consistently. And a reminder that you're the anchor. Your trades aren't the anchors. Your levels aren't the anchors. You are the anchor. The human behind the trade is the anchor. So that's a reminder. And then you can put everything to practice. So if you fill out your name, and if I'm going too fast, you guys, then just let me know. I'll slow down, obviously. And you can open up the worksheet. So we've set it up to remind you of, first, list your goals, because that's top of mind, right? Your monetary goals, your yearly, your weekly, your monthly. And then you go into what matters most. And I started, you know, every day I would start with gratitude, but this is beyond your gratitude. This is what actually matters. Yeah, agreed, Manny. It definitely can't be a strange addiction, but what matters most to you, is it your health, your happiness, your family, you know, what really is to bring you back into your grounded state, out of that money mindset, and then back into the money mindset once you've reconnected with who you are and what matters most. So it's kind of like this ebb and flow. What did Laura say?
She says, when I grade my trade, should I grade it right away, or should I grade them at the end of the day when the trade closes, weekend? And then
for me, I do it at the end of the day. I know in the moment, based on experience, if you are, you know, if you feel like you need to grade them, there's no right or wrong here. This is additional information to give to you to help review and connect with yourself as a trader and more deeper as a trader. So certainly I can help put something in place for you if you need more further assistance. Okay, so back to this, what I'm building. So remember, coming back to your goals and your intentions and what you believe you're capable of doing, because you wouldn't be here if you didn't think you couldn't do it, right? And then your top 3 rules. So for me, it's 3 attempts at a level and then I'm done. You know, that is my top rule. And then what you're focused on, for me, it's always following my plan. And then you start getting into the context of the actual market. So the narrative, what's the bias? It's a drop down. I mean, obviously bullish, bearish, neutral, and there are days when there is no trade, when the market will sit in a 5-handle range for hours, right? And then your overnight. So these are key levels for majority of traders. If you need to add customize, there's a line for customization. There's also, as we get deeper into the worksheet, there's a space where you can list your key levels, like your quarterly opening range, your yearly opening range, maybe your fibs for the month, the year, the quarter, things that don't change. It takes a little bit longer time to change. So, and we've auto generated a 50%. I don't know if many of you look at 50% retracements. Certainly that's been huge for me beyond fibs. So that's auto-generated. And then your bias, and you can grade your trades here. Risk parameters, you do need to pay attention to these, your account balance, your daily loss, your target, your max contracts, your stop per trade, your minimum reward risk, and reduced size. Again, I know that if my first trade is a C trade, I'm immediately reducing size. And if I don't, I know I'm going to be, that's not a wise decision for me. Rules and no trade zones. So these can be changed. They're placeholders. So you can change it. And then your trade log. And if you need more spaces, I would take another page, or you can tell me that I'll add another page to the worksheet. I take more trades than this, but your entry, your target, your size, your setup. You can choose the setup. If it was the 8:30 OR break, your entry type, confirmed earlier impulse, your P&L, and how would you grade it? And your summary, were the trades taken, were they rule-based, how many, your net P&L, your win-loss, and you can do with a slider your mindset and state rating. So maybe your patience was low, your discipline was high, but your patience was low, and perhaps your emotional control was high. So interesting what that day would look like. Curious. What worked today, because you always have to celebrate your wins. What do you need to improve? Always something to improve, and key takeaway to carry forward to your next day. Your key levels, and then a signature. And this is not to say like you're signing your life away. This is just for you to acknowledge that these are your actions that you took, and you acknowledge these actions. And then a reminder, you're the anchor, everything else is the trade. You can save it and print it. I do mentor new traders. So you can save and print it, or you can save it to a folder on your computer. It will save until the next day, and then you can always refresh and start a new session. So that's the worksheet. It's ever evolving. If you need me to add things, please send your input. I'm happy to review it, and if it makes sense, obviously, for sure, we can do it. Now, there's an AI prompt that has helped me. Let me get back to, okay. So the AI prompt, I use this in my trade logs. So because I work with Claude, my work for this has been through Claude. So I take my trade log and I input it into Claude, and because Claude's familiar with me by now, Claude knows what it's looking for in my A, B, and C trades, and can tell me exactly what is really off in my trade day, or what worked well, more so than I can, because again, we're humans. So the greatest thing is that we come from an emotional space, and we come from a not emotional space, but certainly AI is zero emotion attached. So it's nice to have that view. I've given you an opportunity to copy the prompt. So you have to copy your trade log and then copy your prompt into any AI. It could be Chat, it could be Claude, it could be Gemini, whichever one. And then it'll spit out a review of your trade. So, and I talk more about that in my Substack. Let's see. So if you go back to, if you go back to the main page, there's the Substack in the right-hand corner. And then you'll see I've written a couple so far. I do want to also mention, so you can also, there's links so that you can join the pit from the worksheet. And I think that's it. Yeah. Any questions? Any more questions? Okay, so Manny, great question. How do I push through the bad days? The bad days, you know, they're frustrating for sure. I wouldn't say for me, and despair is a pretty tough word, but certainly the more I've used AI to help really narrow down actually what I'm doing while I'm trading. And like I said, I have a scalper mentality. I grew up that way. I mean, I used to trade thousands of contracts and always, my pattern had been in the past, a lot of contracts and more losers than winners, but always ending up positive on the day because I like those runners, the winners to run, and I allow those runners to win. And so, however, as I've gotten older and more algos have evolved, obviously, that I've had to unwind that scalper mentality, which has been tough. And you're right, exactly that you said. And I have to say that AI has been the best tool for me to really narrow down that process. And that's where the grading came in. So. Any more questions?
Yeah. How do you deal with the urge? Can you hear me or am I muted?
Yeah, I can hear you. Go for it.
Okay. How do you deal with the urge to make it back immediately after taking a bad or impulsive trade? I mean, that urge definitely pops up. For me, it's having rules, knowing what they are. Sometimes you can get to noon and you're like, I don't know if I followed my rules. I can't even tell you what my rules are. So knowing what they are, knowing if you take more than 3 trades at one level, that may be a rule, or the rules are going to be unique for you, but just more awareness. Am I following my rules? Do I know what they are? This needs to be a rule for me because I know I struggle with impulsive trades. And then that awareness of, am I trading because my process has a good setup, or am I trading because I want to make it back, or because I have FOMO, I'm afraid I missed it, or because I'm bored and I've been sitting here at the screen and I just want to trade because I'm sitting here. So I think a lot of it just comes to the mindset, the emotional awareness, and knowing why we have the rules in place.
Right.
So, I mean, a great start is to spend some time with the worksheet and to write down what your rules are, top 5 trading rules. Like I know that you usually don't take a trade on the Sunday night reopen because it's always going to end up in an expense. There's all different rules. Most of them are going to be kind of in the same categories. They're all going to be slightly different for each one of us. And I don't necessarily care what Dani's rules are because they don't apply to me. So most of that is just the awareness. Is there any difference between trading ag markets and markets like financials? Yes, there's absolutely a lot. Most of it is in volume and knowing how to trade thin markets. So like, let's see, in the equities, we've traded 718,000 contracts. In the feeder cattle market, we've traded 8,500 in the front month, which is actually pretty good volume today. If we go to, like I was looking at some hedges for a customer in Jan feeders, and they've traded 119 contracts. So you can't put stops. You're going to have a wide bid ask. You can put stops. They're just going to be a lot wider. So it's more of going to be a position trade where you hold it for different levels. Then it's going to be in and out with scratch stop. My view on oil is that I think a lot of this pressure this week, yesterday and day before, was the spread coming together. So I can move my screen over here. share the screen. Okay. So this is unorganized, but
Laura, want me to stop sharing?
if you, or we can keep them both up. So
Yeah.
I don't have it up here, but
Did I freeze? Yeah.
yeah. Okay, so here's the spread on the front month oil contract. So right now, this is May to June oil. And we've just seen the spread obviously move a lot from whatever day it was last week that we were down so hard. But then yesterday and today's Wednesday. So Monday and Tuesday, that spread was down hard. So I think a lot of this was just the spread moving. Yeah, I don't have a view on oil. Just looking at the charts, I don't have an intelligent view on oil. I don't think anyone really does. But kind of like, if I want ownership, I kind of want it in the back. Here's the daily chart on May. You know, we've got the 50-day moving average down here. Kind of lower end of this range was 86 on August 4th. Not August 4th. Does it say that? Oh, it's because the life of the contract, this contract goes back to August 4th, 2023. So this was on March 23rd, and our low was 84.37. So to me, 85 is the lower end of the range, 118 is the upper end of the range. Yeah, I can go to ags.
Laura, I think we have some more
Question.
questions. So you
Yeah.
want to talk about ags and then we'll go back to the other questions, or how do you
Let's
want to?
go a few of these questions and we can move to ag. So how long is your average trade? Just depends. If it's just a spec trade for my personal account, probably short term within the day. Ag trades are going to be, edge trades are much longer, so we could have them on for months. Intraday trades are going to be more on spec. So there's two types of trading in our business. There's spec trading, which is trading to make money. Hedging, which is trading to offset the risk of the underlying commodity that we already own or produce. So if we're offsetting risk, we could go out 2 years, 3 years, potentially. I've got some wheat sold for some accounts that are for 2027. It was hedges. They know they're going to grow wheat next year. They know they're going to grow wheat this year. So on this run up, we've laid off some risk. So it could be 30 days. It could be 90 days. It could be 18 months. We can go through some ags. Historically underpriced. Yes, so it's going to be correlated to the product being hedged. So there's going to be, if we're looking at corn, there's two products here. There's old crop and new crop. So old crop would be something on the crop that we just harvested. Harvest is in the fall. So now everything that's going off of production from the last calendar year, 2025 growing season, is considered old crop. And then now we're going to be planting, and we start planting around May. Some people start planting a little bit earlier. So getting ready for planting now for corn and soybeans. And so that'll be new crop because it's going in the ground now to be harvested in the fall this year. So there can be really wide spreads. You have to know what month you want to be trading. Old crop is going to be, there's no more of that because we already grew it. And so now it's in the bins. And new crop, there's a whole new crop coming for that. So if we get into demand issues, demand-driven rally or surplus of demand, that's going to affect old crop, but that solution can be fixed whenever we get a whole new crop coming. If we get into weather issues, we potentially still have plenty of old crop, but if we get into a drought, that's going to affect new crop because that's the grain, the corn that's in the ground or the soybeans in the ground that potentially affects production for that. So May, July, September are going to be old crop. December, March, and then any contracts for 2027 are going to be new crop. So we'll watch the spreads between old crop and new crop. And right now, just looking at the chart, you can tell, May didn't rally quite as much as December did. New crop rallied more. This is the December corn contract. So if we look at a weekly chart, we were just sideways for 2 years because for a lot of reasons. So present tense, we were in the sideways range for basically 2 years. We broke out of it because of the war following crude oil. Now we've had some profit taking, kind of corrected, and went back to the upper end of this range where we corrected from. And now I think we're kind of finding some stability to either go back up, test this level, or maybe break out and test $5 on December corn. We traded sideways for so long. This is the weekly chart of this individual contract. We can also go to the continuation contract. So this will be the front month contract. So right now May is the front month, and it's always rolling as May expires. So you have to kind of know what you're looking at. So this is always going to be front month. It's not necessarily new crop, but we were flat for 2024, just range bound. Still fairly flat, all things considered. And the first part of 25, we rallied with potentially a trade deal with China, and then that fell apart, and then we had tariffs and et cetera, et cetera. But basically we rallied on the war in Ukraine, because Ukraine's a huge producer. They're the breadbasket of the world. They're a huge producer of grains, wheat, and corn, exporter of corn. And so that was our big event risk. And then we kind of just sold off the long tail of that event. And also in that, we had the Fed, so it's all, you have your fundamental side of it, and then you have the macro side of it. So the Fed said higher interest rates are higher for longer. We have to get inflation down. And the funds just carried that short, stayed net short all the way into middle of 2025. When did we start to see rates start to stabilize and then start to come back down? But the fund positioning on corn was following the Fed. And whenever the rates started to come back down, they stopped pressing that major short. So that's part of why grains have been compressed. Are they underpriced? I don't know, but that's why we were sideways and dead for 2 years. Interest rates going up, higher for longer, funds pressing that short. Usually funds, the typical seasonal pattern of new crop corn will be that the market adds risk, prices in risk during the growing season to make sure that we get a crop grown, we get a crop in the ground, see how it develops, and then the market will take that risk out. And so when the Fed was saying higher for longer, they never really priced in any risk, just assuming that inflation comes down, which big component to inflation coming down is low commodity prices. So it kind of became a self-fulfilling prophecy because rates higher for longer, there's an incentive, the market incentive for commodity prices to go down. We had probably off the top of my head, 3 really solid growing seasons, so ample ending stocks on the balance sheet. If I'm going too fast, just let me know if you have any questions. So right now we're coming out of on paper, a really record corn crop from last year, 2025. So we had a record corn crop. So we have ample ending stocks, and fundamentally, are we undervalued? No, not based off of what we know on paper. Is what the USDA puts out on paper 100% in line with reality? That's anybody's guess. Everyone has an opinion there. So are we undervalued relative to the size of the crop? Probably not. Are we undervalued relative to the risk of geopolitical events and the macro landscape and inflation? What's the Fed going to do? Those are the questions where you could argue there's potential for the market to go higher. Am I involved in the day-to-day of the ranch? Not so much, mostly on the financial side, the office side, not so much on doing things outside, just because we've got 3 kids, so I take care of them and take care of the office work. And my husband does the outside stuff. If we look at soybeans, this is July beans, so old crop. And we were down hard. This was a day when Trump rescheduled the meeting with China, and then we've just traded sideways ever since. So we rallied good from our breakout level, from our sideways consolidation level, and now the market's sitting and waiting to see what that relationship with China looks like. We do have probably more domestic demand coming on the pipeline in the form of biofuels. And so, but this is new crop. This is November beans. So this is new crop. You can see that new crop has stayed a little more elevated relative to old crop because the market needs to get a crop in the ground. It needs to buy some acres to make sure that we can meet the demand that we've seen, the increased demand with biofuels. Cattle have been, so corn's on its highs, but just back to the upper end of this range. It's at the low end of the range since we've seen the war start, where soybeans are mid-range but never really broke as hard as they did 2-3 weeks ago. Wheat, very choppy, had its correction, has rallied this week. Cattle are at all-time highs. So let's look at, we just made a new, so we had a gap here back from October, and we filled that gap Monday. This is May feeders, so this is the front month, the leading month. We filled that gap on Monday, and then had follow through on Tuesday with the momentum, but had some pretty good selling pressure as we made new contract highs. Today, I would say failure, reversal. So is this just a correction? Are we rolling over? To me, it's too early to say. It's just a really strong market. If we look at live, that's feeders. Feeders are an animal that you sell at 750 to 800 pounds. And then live cattle are an animal that reach their terminal end weight at 1,300 to 1,600 pounds. So April's in delivery. So we're not trading April, but June live cattle didn't take out yesterday's low. So we haven't confirmed the same sort of correction that feeders have. They've been leading on this rally this week. Took out that high substantially, whereas feeders just barely took it out, and have moved higher. So looking stronger on the board than feeders have, but also feeders have rallied more than fats have. And then one thing that's interesting to look at is, let's go back.
Page 5, I promise we'll get back to your questions. I've seen them. I'm marking them.
Let's see here.
Hey, Laura, before, when you're finished, will you also talk about if you were just getting into ags, which market would you start with?
Yeah, we can do that. So this is one chart that's interesting to look at. This is the average daily continuation of feeder cattle, and we've got the average daily continuation of live cattle. So this is going to be always the front month contract. It's always rolling as volume rolls. And so we had this contract high. We took that out Friday, held above it, pushed higher. Today's just taking a breather. Whereas feeder cattle yesterday got in, it had a gap where live cattle didn't have a gap back in October. And so May is the front month contract. We got into that gap yesterday, closed below it. And then today we have kind of failed. So acting fairly toppy, too early to say whether, we've seen the high. But if you look at the weekly chart, we've rallied substantially. We've been on a big bull market in 2025, corrected, back up to the highs in 2026. Okay, what was the question you wanted to go back to?
If someone was interested in just starting to trade ags, where would they start?
I would start with grains because they're the most liquid. So let me go here. And, there's so much information on the CME website. But what's interesting, look at corn. You want to trade where a liquid market, where the volume is, where you can get liquidity, you can execute your orders. And so, open interest for all corn contracts yesterday, 1.8 million. Volume, where's volume? 582,000. So that's corn, 1.8 million. Soybeans, open interest, 999,000. Volume, 316,000. So 1 million contracts open for soybeans. This is Kansas City wheat, hard red winter wheat. So there's different types of wheat based on protein. Chicago wheat is more commonly traded, which is ZW, depends on what your platform is. Kansas City wheat is hard red winter wheat, which is what we grow here. So, open interest 297,000, volume 179,000. So, you're looking at 1.8 million on corn. On Kansas City wheat, you're looking at open interest of 300,000. And then if we go to live cattle, you're looking at open interest of 340,000. If you're looking at feeder cattle, you know, 69,000 total. So if you want to get into trading ags, you definitely would want to start with the grains, corn, soybeans, Chicago wheat, soft wheat. You want to make sure you know what you're trading. So 465,000. That way you have the liquidity to, what size trade would move these markets at any given time? I mean, 100 lot could move cattle, 50 lot can move cattle. It just depends on the day. But a lot of funds will have a hard time trading some of these products because, on some of them, there's been 200 contracts trade for that product. And so you want to, at some point, obviously, I'm sure none of us are trading that type of size, 100 lots, 50 lots, but you want to make sure you're not trading against yourself. So that's not an issue for specifically retail traders, but that is kind of what you want to look at. Okay, so a timeline, what's going to be bought, or is there continuous purchase? Also, is there a GLP-1 that has effect on the market discussion? I don't know about GLP-1 effects. I think it's interesting that I read something this week that like 9% of Americans are on a GLP-1, and that was from 2024, and 16% of households in the US have someone on a GLP-1. So I just know it's more demand for protein, more demand for beef. So demand has been strong, even as prices have gone up.
Last question before we get into the other mindset questions. Have you found a specific indicator that works better over another in the ags? Is there one that's?
Yeah, I don't know where my trade navigator went for my charts, but we'll look at. I like looking at moving averages, gap fills. Let's see. Let's go back to a daily. Moving averages on the daily continuation chart. Moving averages on the daily chart.
Yes, we do.
Let's go with.
On
the daily chart. There's
There's
cotton on the daily chart. Cotton's so thin, very thin, but do have a breakout higher today. Let's look at.
We very much do cattle and meat, kind of based on your operation, whatever you have going on.
So, you know, I like, this is the daily contract for Corn. In this platform, we've got the 50-day moving average, 100-day moving average, 200-day. So looking at moving averages, Fibonacci's. I mean, everyone's looking at the same things, but daily opening range is less efficient in some of these ag markets. Then, you know, I don't know, somebody could probably back test that and correct me, but I feel like it's less efficient there. You're going to look at stuff less on a short-term basis than on a longer-term basis.
Thank you. Before I want to scroll back up and look at John B's question. What's your view on having daily, weekly, monthly monetary goals? And then he says, daily, I feel I have zero control over that. Monthly, maybe. Yearly, confident my edge plays out. I think you have to know them. I've been through mentors that don't look at the monetary goal. They only pay attention to the process. And if you follow the process, but the following your process, you know what your monetary goal is if the process plays out, whether you have 1 contract, 2 contracts, 3 contracts, 4 contracts with an extended runner on the expansion. But you know, an average, is it 1,000 a day? Is it 500 a day? And definitely where you're at in your trading journey. Are you just getting back into it? Have you been doing it longer term? You know, what style trading? I think trading is about money, and to be mindful that to know your daily, your weekly monetary goals, I believe you need to know them. I think to overlook them is a miss. And then beyond that, to follow your plan to get you to your goals, whether they're daily, weekly, monthly, yearly, that's the secondary piece to that. And daily, you feel like you have zero control over that, but you do, because it's following your plan on a daily basis to get you to your monetary goals. Laura, you have anything to add to that? Laura? Can you hear me? I can't hear you.
Yeah, should be good.
Yeah.
Yeah.
Do you have anything to add to it?
No, I think that's great.
Okay, and then phase 5 said, what's the biggest mental mistake traders make after a winning streak? I mean, overconfidence, and that you're going to make the same exact every day, which quite possibly you can if you're strict and if the markets don't change on the way your style of trading and your indicators. And, you know, if you're quick to respond and recognize if any changes have been made, that's the best space you can be. But the biggest mental mistake is overlooking any kind of shifts in the market and what's happening on a day-to-day in the news, and certainly becoming overconfident that nothing is going to change.
So,
Yeah, and I think a challenge of that is when you've had a good streak and you feel like you need to press, and knowing when to press and when not to press, because that can shift very quickly. And you have to know, and sometimes we don't get that feedback until after the fact, and it shows up in our P&L.
For sure. I mean, my brother-in-law way back when on the floor, I know different scenario, but certainly he had 3 years of winning trades, 3 years. And that's not including scratches. So, I mean, consistency is following your process and knowing when to stop or when to continue, for that matter. Then what habits had the biggest impact on your consistency over time? Awareness, following the plan, reviewing where the markets are at. Has anything changed? Your awareness. I know that if I fill out or if I review my trades, at the end of the day, I'll review my trades. But if I prep my day for the next day, the night before, I'm less apt to adhere to my plan than if I sit down at my desk before the market opens and I do my plan and I review and go through the worksheet before the market open. I have a higher percentage of adhering to my plan. I mean, this has been over, if I look at, I have my rules on note cards as well. And if I look at them right before I sit down to trade, then it's one of the best habits I can do for myself.
Yeah, do we have any more questions?
Yeah.
Do we want to kind of wrap it up?
Yeah, Dani, I just addressed it. I didn't want to pass it over. I think we can wrap it up. Yeah, it's new. I hope this helps. If you have questions, you can email me. There. And more. You want to put?
Yeah. And then, start with the worksheet. See if you can stick with filling that out for a week. We'll talk next week and see, does that raise awareness? What popped out that it's like, yeah, I didn't even track this, or this was really good feedback for me. Kind of following through that process, knowing your trading rules and having a plan. It's a great start, and you learn so much about yourself and your process once you start tracking that, going through that and looking through that.
Great. Yeah, it is a journey, that's for sure. That is for sure. Well, thanks everybody. Appreciate you so much. Thanks, Laura. Thanks, Dani, Manny, David, all you guys who joined. Thank you.
All right. Thank you.
Have a good one. Take care. Bye-bye.